Uh, so very good morning to all of you watching this video. I am Mannat Sharma from Olive Board, and I'm here with the live mint analysis that we do every Monday, Wednesday, and Friday. I hope all of you are doing well and all of you are studying for your examination. Now, the newspaper is very important, to cover from your exam point of view because most of the details, are there in the newspaper. You will see that most of the circulars that you have to do, the reports that you have to study, all of those are kind of a combination of what is mentioned in the newspaper if you are reading it on a regular basis. That is how newspapers are important. Plus, they help you shape up for your interview. They help you get ready for your interview, and that is why reading them is very important. Good morning, Bhakti, Sudarshan, Ashish. Yes, Mahi, I will share the PDF. Audio is little low. Acha, just a second. Give me 1 second. I will just check the audio and I will let you. 1 second. Alright, let me know now whether the audio is clear. Ashish, is it better now? Is the audio better now? Then we are going to begin our session. And also for those who want to download this YouTube class PDF, like Mahi Verma has asked, you can do it from the Olive Board app. Just download the app. From there, go to the courses section, and there's going to be a separate YouTube class PDFs folder. You can download the PDF from here. Okay, Ashish. Chalo, let's begin with the session. And before I start, let's see what are we going to cover today. What all important news that we're going to cover today? First of all, volatility burns fingers. 5 million direct investors hit exit button. That means जो हमारे direct investors हैं, ये हम समझेंगे that what is the meaning of direct investors. We are going to understand the meaning of direct investors also. And why are they taking out? Why are they exiting from the Indian economy? Why are they taking out their money from the economy? Or why are they not investing, as direct investors? Okay, we have to see that. Secondly, PFRDA allows 100% equity NPS plans for non-government subscribers. Before this, there was no 100% equity. You could, there were different plans that, some amount of money will be kept in equity, some you have to keep in a safer asset, right? You might have read the provisions earlier, the major, provisions of the of PFRDA to invest, right? Now, what has PFRDA done? It has allowed 100% equity investment, 100% equity NPS plans. You can put all your money in equity only for non-government subscribers. Then SEBI has been reclassified, has reclassified these real estate investment trusts. Can anyone tell me in the comment section whether if you've read the newspaper, what is the reclassification of REITs done? What are they now classified as? Real estate investment trusts. Does anyone know? Just let me know in the comment section if you have read the newspaper and you know what is the reclassification of these REITs. Okay? Then SEBI Swagat rules for foreign investors. So SEBI has brought in some rules for the foreign investors. Let's see what those rules are. State debt, India's next big fiscal hitch. Now we're going to talk about state debt which is rising and how it is going to impact the fiscal performance. How is it going to impact the fiscal deficit? Okay. Then a center to tighten lab sample collection according to those transport rules. Excuse me. Then we're going to cover a few fact-based news, and at last we're going to practice a few MCQ. Fine. Now let's start. The first important news is volatility burns fingers. 5 million direct investors hit exit button. So we are talking about India's equity market over here. We are talking about India's equity market fall over the past year. And what is the investor behavior? The ones who are direct active retail investors, which means that they are at least trading once a month. So it's not like, they are, investing for a long-term purpose, but they do trade in the stock market at least as minimum once in a month. Now, these direct active retail investors, they have declined by 5 million between September 24 to August 25. And on the other hand, they are basically following the mutual fund route now, right? The mutual fund route investors are increased. They have increased by 12.5%. So we are seeing a change of trend. Usually direct active retail investors are more than the mutual fund route investors, but now people are moving towards mutual funds. A major reason is because of the geopolitical tensions that are happening, right? In the past year, we have seen a lot of issues related to geopolitical tensions. Wars, global supply chain disruptions, then US tariffs. We've seen a lot of problems because of which people are taking more safer routes, right? Okay. Then active direct retail investors. If we talk about active direct retail investors, they fell from 15.7 million in September 2024 to 10.7 million in August 2025. So you can see this stark difference. Okay. Then nearly 32% decline in numbers. NSE accounts for 92.6% of equity cash segment activity. Right? Yes, Sudarshan Bhakti, absolutely correct. Equity reclassified from hybrid to equity instruments. Very, very good. That means you are reading and following the newspaper, right? Mahi Verma, this is your first class. Okay. Right. I hope you, find this session beneficial. Okay. Achha, Rahul is saying short-term capital gain and long-term capital gain, sudden wars are the main reason people are avoiding direct investment. Exactly, Rahul. है ना? So people are avoiding direct investment because of these, you can say, all these tensions and all these, these tax and all, है ना? Chalo. Okay, and this decline it coincided with Nifty 17% fall from record high. So we are seeing a fall in the stock market, and direct investors are not investing, rather they are following the mutual fund route. That is a trend that you must know. Okay, unique mutual fund investors based on PAN, they rose from 50.12 million to 56.39 million in August. Okay. Okay, just a second. Chalo, next. PFRDA allows 100% equity NPS plans for non-government subscribers. Now, what this news is about? Okay, so we're talking about PFRDA, Pension Fund Regulatory and Development Authority. This new order is going to be effective from 1st October 2025. And we are going to talk about a major reform over here. What is that reform? That now PFRDA has allowed 100% equity investment under the NPS. For the non-government subscribers, you have to remember this. Directly MCQ can be asked in the examination. Fine. Now this removes the diversification constraints. Constraints in the sense that you have to put your money in different instruments only. This constraint is over because some people were not investing in NPS because of this problem. Here we want to invest everything in equity only because we are ready to take high risk, high return wala scenario, hai na? Fine. Now this allows subscribers to better align the investments with retirement and wealth building goals. So NPS subscribers, they can now hold and manage multiple schemes, under one PRAN number. So you know what is this PRAN? Permanent retirement account number that you get, which is your unique number. Like we have Aadhaar number, similarly to that we have your PRAN number as well, right? So now these NPS subscribers, they can manage multiple schemes under one PRAN number only. So they do not have to have different PRAN numbers or what. Okay. Now, what was the scenario? That only a single investment choice per CRA was allowed. But now you can have many investment choices with the same PRAN number, right? Fund managers, they can design schemes tailored to different subscriber groups. If you're self-employed professionals, whether you are direct digital economy workers, whether you're corporate employees, based on your the type of employment you are in, you have the flexibility to decide your scheme and make changes in your scheme. Okay. If we talk about the variants of scheme, then firstly we have moderate risk and secondly high risk, which is going to allow up to 100% equity allocation. So moderate risk means you are going to diversify your portfolio And in case of high risk, you can even opt for this high risk, which allows for 100% equity allocation. Okay. So now pension funds may introduce low risk variants also, and a minimum vesting period is 15 years for your investment, and a minimum आपको जितना you have to invest, and the time period you have to invest your money for minimum. Exit allowed at 60, age 60 or retirement, whenever you retire or whenever you attain the age of 60. Fine. That was the news about. So remember it. Direct MCQ can be formed from there. Fine. I am to rethink real estate investment trust after SEBI update. So SEBI has reclassified real estate investment trust as equity instruments. So pehle they used to be called as hybrid instruments, but now we are calling them completely equity instruments, and these have been reclassified. Okay, that means now mutual funds can allocate up to 10% of their net asset value in REITs. This is the news that we saw in the previous class also, hai na? Previous LIVEMINT analysis class also. That now these mutual funds, they can invest in REITs also. And that is because REITs have been classified into equity instruments now. Hybrid equity funds, balanced advantage funds, flexi cap funds, multi-asset allocations, they may increase the exposure to real estate investment trusts. And majorly for the small investors, what is the benefit? They will get tax-free dividend income. Okay, because corporate tax is already paid at the SPV level, so tax-free dividend income you are going to have. Fine. Direct investors enjoy 5 to 7% tax-free yield plus capital appreciation also. And mutual fund investors, REIT distributions are taxed as dividends at their slab rate only. So this is going to really benefit the direct investors or the small investors, you can say. And if we see the dividend yields of major REITs, for example, we have this Nexus Selectra 6.15%, Embassy REIT 5.8%, Brookfield REIT which is 6.3%. So you can see that the dividend yield of these major REITs is also quite good. Fine. So direct REIT investment, is going to give you a benefit. Is going to give you many benefits like tax benefits, control over choice of REITs, regular cash flow. But of course, there's going to be liquidity issues, concentration risks, and a lot of monitoring will be required. So what you have to remember that SEBI has declassified the REITs as equity instruments from hybrid instruments. This is the major crux of the news that you have to remember. Okay? If you talk about the mutual fund route, this is more suitable for retail investors who prefer diversification and SIPs. It provides professional management. So now these mutual funds, they can also invest in REITs. That is what this news is about. Okay? Fine. Next, SEBI's Swagat rules for foreign investors may have a flip side. So have you guys heard about these Swagat rules? What are these Swagat rules for the foreign investors? This update is also very, very important. Okay? Swagat FI is what? Single window, automatic and generalized access for trusted foreign investors. What is this rule? Single window, automatic and generalized access for trusted foreign investors. This approval has been done on 12th September by the SEBI board. What are the key features of these rules? Foreign investors, they can register for a period of 10 years. So bar they don't have to do a lot of registrations. For 10 years continuous period, they can invest. Okay? They can register as a foreign investor. Okay? They can have a single demat account for all kinds of securities. Pehle this was not the scenario. Now you can have one single demat account for all kinds of securities. This is going to cut red tapeism. It is going to attract long-term global capital as well. It is going to avoid paperwork duplication, ensures correct tax treatment. Therefore, it is going to become easy for the foreign investors to invest in the country. Okay, these are the rules that we're talking about. So, greater regulatory certainty is going to be there, reduced friction between investors and tax authorities, improved transparency in capital gains, tax calculations. It boosts credibility in treaty discussions with tax authorities. What are the challenges? Challenges are basically no direct tax changes are announced. No direct tax changes have been announced. Greater transparency may increase regulatory scrutiny. And a framework applies only to the low risk entities. This also you have to remember. That framework is basically for the low risk entities. Government and related investors, regulated public retail funds, pension funds, insurance companies, for them. Fine. Next news is related to your state debt, India's next big fiscal hit. Acha, before I read out this, tell me some basic things. What do you mean by fiscal deficit? What is the meaning of fiscal deficit? I used this term, a few minutes back. Who is going to tell me in the comment section what is the meaning of fiscal deficit? Anyone? What is the meaning of fiscal deficit? And which act do we have which talks about fiscal consolidation? Which act do we have in India whose major motive is fiscal consolidation? Bhakti Singh, gap between government total expenditure and total receipts, right? And revenue, okay. Sudarshan is saying total expenditure exceeds its total revenue. Government expenditure minus tax collection. But nobody has given me the exact meaning of fiscal deficit. If you are saying that excess of tax, expenditure and a total expenditure over total receipts, right? This is what you are saying. But then what is the meaning of budget deficit then? If fiscal deficit is this, what is the meaning of budget deficit then? Yes, Ashish, absolutely correct. Total expenditure minus total receipts other than borrowings. So other than borrowings word is very, very important that you have to use. So what is fiscal deficit? Total expenditure minus total receipts excluding borrowing. You have to exclude borrowing. And why do we exclude borrowing? So that we can have an actual scenario, so that we can see how much gap do we actually have. Because if we borrow, that is going to be a part of our total receipts, that is a part of your capital receipts, that means it is going to show that your revenue has increased. But to see the actual gap without borrowing, how much gap do we have in this expenditure and receipts, that is what is called fiscal deficit. This gives us a real scenario, right? And for reducing this fiscal deficit, we have a major act in the country, in India. What act am I talking about? Yes, Ashish, borrowings are included in budget deficit. Exactly, very good. Anurag is saying FSDC Act. Is that so? Anybody else who'd want to try? Yes, Ashish, it is the FRBM Act. We have the FRBM Act, Fiscal Responsibility and Budget Management Act of 2003. Very good, Bhakti. So in 2003, we had this FRBM Act, Fiscal Responsibility and Budget Management Act, whose main motive was to reduce the fiscal deficit. Actually, what was the target of fiscal deficit? According to the FRBM Act, we should reduce the fiscal deficit target to how much percentage of GDP? Anyone? What percentage of GDP should we reduce the fiscal deficit to according to the FRBM Act 2003? Any idea? Do you guys remember anything related to that? Fiscal deficit target according to the FRBM Act. No, it's not 4%, not even 4.5%. I'm asking only according to the FRBM Act. Not even 4%. No, not 4.5%, Ashish. The answer is, anybody else who'd like to answer? According to the FRBM Act original, we had to reduce fiscal deficit to 3%. But of course, we were not able to do that. Why? Because of many, many problems. In 2007-8, we had the global financial crisis. Then because of that, we increased our expenditure a lot. Then COVID, we increased our expenditure a lot. So we were not able to meet the fiscal deficit target. And not 2%, it was 3%. Okay, everyone, please revise, this. And tell me right now, what is the current the fiscal deficit target according to the government for the year for the financial year 26. What is the fiscal deficit target that we have to reduce the fiscal deficit target? This is according to the budget, the economic survey. What is our target for financial year 26? How much do we want to reduce our fiscal deficit to? Yes, Anurag, absolutely correct. 4.4%. Okay, 4.4% is our target for financial year 26. This is our target to reduce the fiscal deficit. Yes, Bhakti, absolutely correct. 4.4. Okay, these are some important basic facts. So whenever you're reading a news like this, you see the word fiscal over here, just quickly revise all these basic terms. What is fiscal deficit? Apart from that, there are other types of deficit also. Like we have the primary deficit, we have the effective revenue deficit, we have the revenue deficit, and all these things. You should revise all this part. Fine. Chalo, let's take a look at the news over here now. What is this news about? That India's fiscal health analysis is often limited to union government. Usually when we talk about the fiscal health, when we talk about fiscal deficit or the fiscal position of the country, we usually talk about the center government or the union government. And we do not really consider the state dynamics. But if we talk about the reality, then states collectively account for nearly 1/3 of India's overall fiscal gap. So the overall fiscal gap, may say 1/3 is, 1/3 is part of the state's gap. Okay, union government fiscal deficit comparison as of financial year 25 is 4.8% of GDP for union government and 2.7 to 3.2% of GDP for the states combined. That means states contribute 30 to 35% of the total fiscal gap. Right? If I talk about debt to GSDP, gross state domestic product ratios in Punjab, West Bengal, Himachal Pradesh, they already are above 40%. And yesterday only we saw a news that these three states, Punjab, West Bengal and Himachal Pradesh, they are requesting the 16th Finance Commission to, reduce their debt burden and waive off their debt and, provide them with certain provisions. I hope you have followed the previous class. See, you have to follow the newspaper or this LIVEMINT analysis class on a regular basis so that you can understand everything in continuity. Because the news was related to Punjab, West Bengal and Himachal Pradesh in the previous class. If you remember, hai na? And again, these three states are in news because their debt is very high. Okay, and if, the state's debt is really high, then there are, there's an increased risk of macroeconomic instability. Okay. Acha, if I talk about the center versus the states, then union fiscal deficit gets more visibility, है ना? Because it directly impacts inflation, interest rates, credit ratings, global investor sentiment. But the states are usually, overlooked because of off-budget borrowings. What is the meaning of off-budget borrowings? We discussed about this, the meaning of off-budget borrowings in one of our previous LIVEMINT analysis class only. Can anyone tell me what is the meaning of off-budget borrowing? How do states do off-budget borrowing? Which do not really show the actual deficit, or the actual gap in their revenue and expenditure of the states. Off-budget borrowing. What is the meaning of off-budget borrowing? Whenever such terms are there in news, you have to remember and you have to understand the meaning of such kind of terms. It is very, very important. You can directly get MCQs in your exam. And especially when you write the long answer, descriptive answers also, then also you should have reasons. Reasons and all ke liye also. Any idea what do you mean by off-budget borrowing? Anyone? Government borrowing that is not shown in the budget. Okay. More than usual borrowing, Sudarshan is saying. No. The off-budget borrowing, what does it basically mean? That these state governments, they do not show how much of a liability they have incurred in their own balance sheet. What do? Is they directly do not borrow. They tell the state, you can say PSUs, they tell the public sector undertakings or the state owned firms, you guys, I'm giving you this project, you guys borrow this money from the people and then you just focus on this project. The liability is going to be on the government. So the state government says ki you say there is this company A which is a public sector undertaking, okay, a state owned firm. So I'm going to delegate this to this A company, that you go and do this project, borrow this money from the public and invest over here. Don't worry, the liability of paying back the money is going to be on me. So the liability is on the state government, but it is not showing in the balance sheet. It is not letting this money reflect in the balance sheet, so it does not show that how much borrowing the state has actually taken up. Bypassing the formal borrowing limit, exactly. Okay, fine. So this is the meaning of off budget borrowing. So that it is not mentioned, it is not seen in the budget or in the balance sheet of the government, so it does it through the state owned firms. Fine, so that it can understate the liabilities. Fine, that is what is meant by state off budget borrowing. Okay, these are driven by rising social and development spending, weak revenue, central policy shifts. It distorts the real fiscal picture. We do not really understand what is the actual fiscal position of the state government. You know? And if we talk about India's consolidated general government fiscal deficit of center and states, it gives a more accurate picture of the fiscal vulnerability. Okay, so I hope these terms are clear to all of you. I'm giving you homework here. You're going to revise all these terms related to fiscal deficit, all the terms like these: effective revenue deficit, primary deficit, all these types of deficits you have to remember, revise. You have to also revise the FRBM Act of 2003. Okay? This is your homework, and I hope you've understood the basic terms that we've discussed in class. Right? Next. Center to tighten lab sample collection transport rules. Okay, let's take a look at this news. What is this? Now, the center is planning more overhaul of India's 300,000 diagnostic laboratories to ensure reliable and accurate test results. So what are they doing? They are checking out these 300, 300,000, 3 lakh diagnostic laboratory, so that they can give us accurate results. So that is the government is planning to do. Okay, authority involved is DGHS, the Directorate General of Health Services. Why are they making certain changes? Because there are gaps in regulation which have led to compromised sample integrity and inconsistent results. Delhi High Court directed the center to frame rules since no law existed for collection, storage, and transport of diagnostic samples. Basically, diagnostic laboratories are those laboratories which, basically diagnose the problem that you are having. Say, the tests and all which are, with the blood tests and all that you do, and they diagnose the problem, or they conduct these tests. We're talking about those laboratories. There is no law as of now. There was no law for collection, storage, and transport of diagnostic samples. There was no monitoring or evaluation done. Now we have to improve this part, and because of that, the center is planning a major overhaul of India's 3 lakh diagnostic laboratories. It is scrutinizing it, ensuring that they give us accurate test results. All medical samples, blood, urine, swabs, biopsies, etc., they will be handled by trained professionals, and they will be transported under proper conditions. This is going to be ensured. Use of PPE kits, personal protective equipment, triple packaging, all these things will be taken into account. Standardization aims at minimizing the degradation and contamination of samples so that we can have accurate results. Because if we have accurate diagnosis, then there's going to be effective treatment plan. There's going to be high level of professionalism in the labs. And it is going to really help the patients who are especially vulnerable and of the high risk group. And India's diagnostic industries is valued at $13 billion. Okay, so this is going to impact this scenario. Apart from that, we have a few fact-based news, or you can say viewpoints, that we are going to cover. For example, firstly, have the US tariffs begun impacting India's exports? This is an analysis. Okay, this is an analysis that the US tariffs of 50% that have been, levied on Indian goods and all, have our exports started seeing the impact? We have to analyze this. Let's see the data. If we talk about India's export growth as of August 2025, overall exports grew 6.7% year on year, to $35.1 billion in August. Exports to US therefore slowed 7.2%, but overall exports increased. Okay, so pehle we used to export 19.6%. Now it has been slowed to 7.2% to US. So the overall we have seen the overall exports grow. Okay, fine. So if we see year-on-year growth in US exports, there has been sharp fluctuations. Let's start from November 2024, 2.76% decline. April May 18.67%, July 28.02%, August May 7.15%, 9-month low. So US exports have been declining. Which are the major sectors which have been hit by the US tariffs? Majorly the labor intensive sectors. Majorly the labor intensive industries have been impacted. For example, in case of garments, a reduction in exports by 2.7%, carpets by 72%, leather and footwear have been affected, gems and jewelry have been affected. You have to remember these things, what all sectors have been affected. So you have to remember which all sectors, the labor intensive sectors like gems and jewelry, leather and footwear, carpets, garments, all these. And India has tried to expand to UAE and Netherlands, other countries we are trying to explore. And UAE mein we saw a 23.4% growth in August 2025. Netherlands mein 2.7% se 2.8% the share has increased. Okay, if we talk about the impact of US tariffs, 50% among the highest globally versus Vietnam's 20%. Okay, it has affected labor intensive sectors, and it is going to, it is expected that our exports are going to worsen in September 2025. There are going to be a sharp fall in exports. Achha, if exports decrease, what is going to be the impact? Can anyone tell me? Can you economically give me the impact that if the exports in the economy decrease, if our exports decrease, how is it going to impact the economy? Can anyone tell me in the comment section? Anyone? We are saying that our exports will fall further. How is it going to impact? Darshan is saying forex. Forex how? It will reduce our forex reserves. Okay, very good. Very good. It is going to reduce our foreign exchange reserves. Fine. Secondly, rupee will fall. Okay, it will lead to depreciation of the rupee that you're saying. Anything else? Major balance of payments will get a hit. Okay, BOP crisis you can say, or you can say there's going to be a deficit, a trade deficit, where our imports will be greater than exports, which is going to lead to current account deficit or trade deficit. Hai na? Yes, that is another problem. What else? Anyone else? What else? Anything else that you can think of? See, when we calculate our GDP, there is this expenditure method. AD is equal to C plus I plus G plus X minus M, or you can say C plus I plus G plus net exports. If our exports are going to decline, aggregate demand is going to decline. If aggregate demand will decline, that means our GDP will decrease. If our GDP will decrease, that means overall economic growth will decrease. And we are trying to become the fastest growing economy, that we are not going to, will not be able to fulfill. We want to become Viksit Bharat by the year 2047. We will not be able to achieve that goal. We want to bypass, we have recently, bypassed Japan to be the, fourth largest economy. And how are we going to move to the upper positions and third, second, first? Yes, Sudarshan, it impacts growth. You have to find other revenues, otherwise hit to GDP, loss to market, unemployment. Exactly, the overall economy is going to be impacted. That is the significance of us reading about exports and what is the scenario. How have these tariffs impacted the exports? Because they directly impact the economy. Okay? I hope this is clear. This is the analysis. This is the kind of analysis also that you have to do. Okay? Then, DOT questions. TRAI's proposed SATCOM charges. So, TRAI has proposed some satellite communication charges. What has it done? there has been issues which have been raised by the Department of Telecommunication, because TRAI has proposed an additional 500 annual charge per subscriber in urban areas for SATCOM providers. So SATCOM providers, like we have Starlink, which is going to provide you internet through the satellite services. That is what is SATCOM. That is what is SATCOM service providers. Fine. So what TRAI has proposed, that we need to charge 500 on an annual basis from the urban areas, from the subscribers from the urban areas, to provide them satellite services. Now, Department of Telecommunication is arguing that this is difficult to implement, because it is very difficult to distinguish the people, between the urban subscribers and the rural subscribers. It is very difficult, to alienate the two. Okay, because the difference between you cannot really distinguish, because urban and rural subscribers, it is very complex to find out which are urban users, which are rural users. TRAI recommended satellite internet companies pay 4% adjusted gross revenue as spectrum charges. Okay, that these satellite internet companies have to pay 4%. An annual minimum spectrum charge of 3500 per megahertz for SATCOM companies was also proposed. Okay, DOT's demands are that you review this 500 annual subscriber charge, increase the annual minimum spectrum charge of 3500 per megahertz, especially for mobile satellite services. Which is the decision making body over here? We have the Digital Communication Commission, comprising of officials from DOT, NITI Aayog, relevant ministries. Fine. Then for the class of 2026, labor market finally turns a corner. India's campus job market is rebounding. Aeon Campus Study 2025 surveyed 220 plus organizations. 73% recruiters expected moderate to high growth in campus hiring. Campus hiring in the sense that, we have the university campus. So the companies who hire directly from directly the freshers from the campus. We're talking about that. Okay. So 73% of recruiters, they expect moderate to high growth in campus hiring. 40% recruiters plan to expand headcount by more than 10%. What are the sectors driving this recovery? IT, industrial, materials, healthcare organizations. Financial services, life sciences, consumer goods, they are strong performers. Who are going to be the top hirers? TCS, Infosys, Wipro, HCL Tech. Internships have become a primary recruitment pipeline. 67% of organizations now offer variable pay to fresh hires. Companies are prioritizing diversity, especially gender diversity. Over 30% expanding outreach to women-only colleges, diverse institutions. Now, why this is important is because the job market is quite weak, right now. There's unemployment, there is youth unemployment, there is educated unemployment in the economy. We are suffering from these problems of educated unemployment, graduate unemployment, under employment, youth unemployment. We are suffering from all these issues. And this is a positive path towards that more and more youngsters are going to be a part, or they're going to receive jobs, because campus hiring is going to increase. Okay. Then we have another news that SEBI preps roadmap for India to be price setter in metals. See, either you can become a price taker or you can become a price setter. Price taker in the sense that he gave whichever majorly the in the international level, whatever prices are, that we accept. Price setter is that we set the price and others follow us. So SEBI is preparing a roadmap so that India can become a price setter in case of metals. So India aims to become a global price setter in metals, reducing reliance on the London Metal Exchange. So rather than following the London Metal Exchange and following the prices which rather than becoming a price taker following the London Metal Exchange, India aligns their goal with the Make in India and Critical Minerals Mission. India's industrial metals market is valued at 20 trillion rupees, which is 6% of the GDP. Okay. Focus on base metals. The focus is going to be on base metals like aluminum, copper, zinc, which is very, very important and crucial for infrastructure and manufacturing. Okay. Then the commodity derivatives market has three functions: real-time price discovery, risk management mechanism, transparent benchmarks. Now, SEBI is forming a new working group for non-agri commodities with 4-point agenda. They are going to focus on real-time margin collection, promote new exchange products, support logistics services, mineral exploration tools, boost SME participation. By December 2025, commodity brokers they come under the unified reporting system for compliance. There was this MCX report, industrial strength, financial debt, which highlights India's economic might in metals. That is why SEBI is proposing that we are going to make a roadmap as to how can we become a price setter in case of metals. And participation is expected from SMEs, from producers, consumers, brokers, investors, mutual funds, ETFs, and all. Fine. So these were the important news that I wanted to cover with you. Some were technical news also, है ना? A lot of news related to SEBI were there. Then there were important, like important news related to fiscal math and all. So you need to know the static portion of it. Okay, so these were the important news. I hope you guys are also reading the newspaper, and this is how you have to identify which news is important, which is not. Let's do a few MCQs and let's see whether you guys are able to remember whatever we have done. And let's just test the knowledge. Fine. First question. According to SEBI's roadmap, what is the primary aim of India's push in the metals market? To increase import of critical minerals, to shift from price taker to price setter in global metals trade, to replace agricultural commodities with metal derivatives, or to reduce SME participation in commodity markets. What is the answer? Quickly, I want all of you answering the easiest question because we have just covered this news at last. है ना? So absolutely correct. Price setter, to shift from price taker to price setter in the global metals trade. Very good, Sudarshan, Ashish, Bhakti, Anurag. Very good. Second question. According to Aeon Campus Study 2025, what percentage of recruiters anticipate moderate to high growth in campus hiring for class of 2026? 50%, 67%, 73%, or 40%? What's the answer? Sudarshan has given me the answer as C. Bhakti is also saying C. Ashish says C. Absolutely correct. It is 73%. Okay, very good. So 73% recruiters anticipate moderate to high growth in campus hiring. Which of the following was a key concern raised by Department of Telecommunications regarding TRAI's proposed satellite communication charges? TRAI recommended reducing AGR-based spectrum charges to 2%. Difficulty in differentiating between urban and rural subscribers for the 500 annual charge. TRAI exempted Starlink and OneWeb from paying spectrum charges. DoT proposed to completely abolish the minimum spectrum charge. What is the answer? Third question. Ashish, Sudarshan, Bhakti have given me B as the answer. Anybody else who would want to answer? What about you, Anurag? Absolutely correct. Difficulty in differentiating between urban and rural subscribers for the 500 annual charge. Fourth question. Recently, the US imposed 50% tariffs on Indian exports. Which labor-intensive sector witnessed the steepest decline in shipments to the US? Excuse me. In August 2025, carpets, ready-made garments, gems and jewelry, leather footwear. Steepest decline. Bhakti says C. Sudarshan is also saying C. Anybody else? Steepest decline. Anurag is also saying C, but the answer is carpets. It is A and not C. Okay, let's take a look at the news. एक बार फिर से फटाफट से let's go back and let's see the steepest. So steepest decline. See, garments में 2.7% decline. Carpets में 72% decline. Leather and footwear were also affected. उसमें we don't have the exact percentage. Gems and jewelry hit by 50% tariff. And they have shown a decline of 8.3%. So garments, you can see decline of 2.7%. Then gems and jewelry 8.3% से decline, and carpets decline by 72%. ठीक है, remember it. ठीक है, I hope this is clear. So it is not gems and jewelry, it is the answer is not C basically. What was the answer is A, carpets. ठीक है, which saw a 72% decline. ठीक है, अनुराग, सुदर्शन, भक्ति. चलिए, fifth question. As per the new rules proposed by DGHS, what will be mandatory in the transport of diagnostic samples? Digital reporting and AI-based analysis, use of personal protective equipment and triple packaging, direct hospital to lab courier system, blockchain-based data verification. Fifth question, what is the answer? Fifth question, Ashish, Bhakti, Anurag are saying B. The answer is B, use of PP and triple packaging. Absolutely correct. According to the article, what share of India's total fiscal gap is contributed by the states? 10 to 15%, 20 to 25, 20 to 35, or 30 to 35%? Sixth question. What share of India's total fiscal gap is contributed by the states? A, B, C, or D? Hanji. Who is going to tell me the answer? Bhakti is saying A, contributed by the states. Darshan is also saying A. But the answer is D, 30 to 35%. It is not A. ठीक है, 30 to 35%, not 10 to 15%. हाँ, absolutely correct अनुराग, D. ठीक है. What is the primary objective of SEBI Swagat Foreign Investor Framework introduced in September 2025? To provide foreign investors with tax-free returns on Indian investments, to unify investment routes and simplify access through a single gateway, to allow foreign investors to directly control Indian listed companies, or to replace mutual funds and insurance companies with foreign institutions. What is the answer? हाँ, D. D था सुदर्शन, very good. हाँ जी, seventh question, what is the answer? Primary objective of SEBI Swagat Foreign Investor Framework. Right, to unify investment routes and simplify access through a single gateway. Very good, very good. Okay, eighth question, what is the biggest advantage for small investors investing directly in REITs as per the SEBI update? Tax-free dividend income, guaranteed capital appreciation, higher liquidity compared to mutual funds, or complete protection from the market risk? Biggest advantage for small investors. Hanji, Sudarshan, Bhakti, Ashish, Anurag. What is the answer? Biggest advantage for small investors who are going to invest directly in REITs? No, not C. C is not the correct answer. See, the correct answer is A, tax-free dividend income. They are going to receive tax-free dividend income. That is the major benefit for them. So this was, highlighted in bold in the article. A, Sudarshan. Anurag, A. ठीक है, tax-free dividend income. Next question, according to new PFRDA order effective from October 1, 2025, what key changes has been introduced for NPS non-government subscribers? They can now withdraw funds before 5 years without restrictions. They're allowed to up to 100% equity allocation under NPS schemes. Government subscribers are allowed multiple PRAN accounts. NPS will no longer allow investment in corporate bonds. What is the answer? Very easy question, है ना? Ninth question, what is the answer? Ashish has given me the answer. Sudarshan has given me the answer. Anurag has also given me the answer, Bhakti as well. So they are allowed up to 100% equity allocation under NPS schemes. This was the major headline, right? Absolutely correct. Next question, number 10. Between September 24 and August 25, how did investor participation in India's equity market change? Direct retail investors declined by 32%, while mutual fund investors increased by 12.5%. Direct retail investors increased by 32%, while mutual fund investors declined by 12.5%. Both direct retail and mutual fund investors increased significantly, or both direct retail and mutual fund investors declined significantly. What is the answer? 10th, A, Ashish, Anurag, A, Sudarshan forgot. Chalo. The answer is A, direct retail investors declined by 32%, mutual fund investors increased by 12.5%. Okay? Chaliye. So that is all from my side, everyone. Thank you so much. If you guys want to connect with me beyond these sessions, then Mannat Educator is my Telegram handle. Okay? Mannat Educator is my Telegram handle. You can connect with me over here. Fine? And that is all from my side. I hope this session was beneficial for all of you. This is how you have to study the newspaper. Definitely do your homework. The homework that I've given you, it is very important. It is going to help you revise your static portion as well. Fine? Okay? Okay, Bhakti, Anurag, Ashish, all of you also have a great day. Sudarshan, in the evening, are you talking about today's evening class that I'm going to take? See, through MCQs, it's a mix of the schemes. Mix of schemes, there is no pattern. We are doing mix of important schemes. Okay? And you'll see all these are important schemes which were in news or important. Okay? So there's no specific month that I'm going to cover. It is going to be together overall. Okay, Sudarshan? Chaliye. So that is all from my side, everyone. Take care. Have a nice day. Keep studying, and I will see you all in my next one. Okay?